less than 4 weeks before a safe harbor provision from the IRS closes forever, and it is the difference between paying a little bit or less in tax on your crypto gains or a ton. This is going to smack a lot of crypto investors in the face. And I guarantee you that your CPA hasn't called you because your CPA, 99% of them don't own crypto, don't know anything about it. And it's important that we talk about it today. I'm not talking about tax losses, taking, these classic tax strategies of selling your crypto lower. We're going to talk about this safe harbor position with the IRS that's ending. It'll be over January 1st, closed. And it's the difference between HIFO and FIFO, two acronyms that most people don't understand. A lot of stock and crypto traders understand it. But before I dive into that, two things. I have put together a course, and I am in the middle of filming it right now with my tax planner, my CPA, who is an avid crypto investor. And he came to me and he said, we need to teach the people this because most CPAs, because he goes to conferences all over the country, do not know anything about this, and people are going to get wrecked in their crypto taxes. So we started filming this course. Links down below to 2-course bundle, Tax Planning 101 and the Crypto Tax Pro. I highly suggest you take a look at it. I'm going to be raising the prices exponentially soon. All right. I went on to CNBC to see what people were talking about with crypto taxes. And there's a story down here with a CPA. Let me see here. His name's Mikos Ringenbar, a certified public accountant and founder of accounting firm Mikos CPA. And you know what he's talking about? The only thing he's talking about is a wash trade, because the IRS still hasn't caught up with stocks, and because the IRS treats crypto differently as property rather than a security. You can still, now, first off, anything you hear in this video, don't take it as tax advice. I am not a CPA. I'm not an enrolled agent. I read a lot of books on tax. I am a cryptocurrency investor. And I am one of the rare people, one of 700 people, I believe it was in the year 2018, that checked the box at the top of my tax return that said, I have invested, purchased, sold, traded, done something with cryptocurrency. There are a lot of people that think they got one over the IRS because they bought crypto a long time ago and it's on a cold wallet. The IRS, I hate to break it to you, has had the technology since about 2013 to find everything you have. And through court orders, warrants, all kinds of stuff, they've gotten a hold of your accounts that were tied to your KYC wallets on your exchange. Okay, this is how they found the creator of Silk Road. I'm very serious when I'm talking about this. So this story out of CNBC, all this guy, this CPA is talking about, is selling at a loss so that you can wash between your long-term and short-term capital gains against your losses, because Bitcoin took a header and so did the whole market, right? Nowhere in this story does it talk about HIFO and FIFO. So I'm going to share with you, and then I'm going to share, I'm going to go through the table of contents and what I'm going to teach you with my certified tax planner and CPA, okay? First, FIFO is the acronym for first in, first out. This is how most exchanges set it's just how it's set. You go into your tax settings, and it's set that way. And it's the Coinbase, Gemini, and all these things, they default to that. This safe harbor provision allows you to select HIFO, which is highest in, first out. So I'll give you an example here. If you bought Bitcoin at $10,000, I'm just curious, how many of you type me if you bought Bitcoin anywhere between $0 and $30,000? Just give me a me. Let's say you bought one Bitcoin at $10,000. Then you bought one Bitcoin at $50,000. Then you bought one Bitcoin at 120,000. So you got these three, right? 10,000, 50,000, and 120 grand. Now, we all know right now the price of Bitcoin is at like 90,000 and change. And you want to take a tax loss. If you are in FIFO, you're on Coinbase, and you want to sell one Bitcoin at a loss because you got the other two pulled off the exchange, it would count that one Bitcoin that you sold at 90, let's say 91,000, as an $81,000 gain because it would track the first Bitcoin into the system that you bought at $10,000. Whereas if you had selected HIFO and you're going, wait a minute, I bought that Bitcoin years ago at 10,000 bucks. I don't want to sell it because that's my long-term capital gain. I want to wash my short-term, the one that I bought at 120 grand. I'd like to sell it right now at 91,000, let's say, and then rebuy it immediately. Since you have already selected FIFO because it's just the generic one, nobody was doing tax planning with their crypto. And what's funny about this, I got to say real quick, got to break in. There are so few people watching this right now because this isn't a sexy topic, but people are going to get absolutely financially wrecked by this. I do a normal crypto video. Right after this, I'll probably pop on and do an XRP video. Everyone will watch it. You watch. There's like 200 people watching this. But I'm going to do a video right after this. I'll just stop it, boom, start another one. And within 6 minutes, you'll see 500 to 1,000 people on. So, okay, so just remember that. All right. So if you select HIFO right now, because the IRS is going to stop you from having the ability to do that by January 1st, if you would have sold your one Bitcoin, instead of it counting as an $81,000 gain because it counted the first one you sold, and that was a long-term capital gain, it would count the one you bought at 120 and count it as a, what is that? 39,000, fast math, but over $30,000 loss on your taxes against your gains, your short-term gains. Type yes or no if this is making sense and I'm making sense to you why this is a big deal. So as of right now, this safe harbor is in place for cryptocurrency investors until December 31st. So nobody's talking about this. All right. I want to bring you this information first. And the reason why I'm doing the pre-filming is we've already filmed the entire crypto course. We're uploading and editing right now and hopefully get it all out to you in the next 2 days. The tax planning course we're filming today, right? Because there's so many things people don't know about tax, and they give their tax return to their CPA, and they don't understand that a lot of CPAs use generic tax software now, and they've gotten lazy and they don't do anything themselves, and they themselves don't own other businesses, so they're not they're not tax planners. They're historians, right? They're just putting data inputs for you. I pay tens of thousands of dollars per year to have my taxes done, okay? I spend more time with tax professionals in some cases than other people because it's worth so much money. So a lot of people, even friends of mine, have went to Coinbase and they're like, why is Coinbase showing that I made $50,000 in gains when my portfolio has never even been worth that? It's because the way they bought and sold, and then they pulled stuff off onto a Trezor or a Ledger or something like that, and they didn't know that it counts as a taxable event. They didn't buy any of the courses I taught in the past. And now I've focused this on taxes. So some things I want to show you, because we use a specific software. And in this course, I'm going to teach you how to use the software because there are tons of tax softwares, but only a few of them have really stayed up with the times where you can go in there and not manipulate the data, but change the data to show, hey, I'm going to show people how to upload and input their exchange accounts. Either manually or syncing. I'm going to show people how to take their wallets, their off-exchange wallets, attach them, and then instead of them showing as a purchase or a sale, to be able to connect those two transactions and be able to show a transfer so that that taxable event doesn't happen. I'm going to teach you about crypto to crypto sales and how they're bad and what happens when that goes on. I'm going to show you, my CPA is going to show you how to claim hard forks, airdrops, staking rewards, and things like that, all inside of this software. We've got generic, not generic, but like actual lessons on HIFO, FIFO, U.S. tax consequences of those swaps, capital gains versus ordinary income, why you need to check the box and where that box is on your tax returns, and how to question and make sure your CPA knows what they're doing so that you're getting the greatest tax benefit legally. That's why I had to bring on the big guns with his licenses and all of that stuff to teach you this course. I hope you got something out of this, but sadly, this is one of those examples where I come out with free information showing you this HIFO, FIFO safe harbor provision that is not being talked on the internet. No CPAs talking about it. Although there's some of them that watch my channel that like, have all these big things and they don't come up with their own stuff. So you'll see it like in a few days on their channels. But I give you all that information for free so that you can go to your tax advisor and say, hey, what's the ninja talking about this HIFO, Safe Harbor Act with my cryptocurrency? And if he looks at you like you're crazy, first off, Google it, then go get another tax professional because you're going to be in trouble. I'm not joking. This isn't clickbait. This is reality. The link is down below to the bundle, the pre-filming bundle. This is going to end in less than 3 days. I'm not joking because I can't wait to jack the price up on this. It's way too valuable. The Economic Ninja is out.